The cash flow statement gives details about cash inflows and outflows for the company over a period of time. And as I said earlier, the cash flow statement is really just the worksheet behind the cash line item on the balance sheet. Cash came in and cash went out over the reporting period. But from where? Was it from the operations of the business, from selling products or services? Was it from buying inventory? That's all in the first section. That's cash flow from operations. Or did we invest in some new assets? Maybe a new computer system, and that would be in the second section, the cash flow from investing. Or maybe we borrowed money, we might have paid off debt, issued a dividend, and that would be cash flow from financing here in the third section. And to come back to the first section, cash flow from operations, it seems a little weird because it starts with net income. But the idea is that you've already done most of the work if you start with net income and then you reconcile in and out the non-cash items like depreciation, which would be an expense on the income statement, but it isn't actually cash out. The cash went out when you bought the thing that you're depreciating, the computer system, for example. And so you need to add that amount back in so you can focus on just the cash flows. So it's the same with premiums receivable. It was counted in revenue on the income statement, and it flowed through your income statement all the way through to net income, but you haven't actually yet received the cash from the customer. So you need to take that amount out if you're looking only at cash. And so it takes a little bit of effort, but hopefully it's not as complicated as it looks at first glance. And the three financial statements are tied together. So starting with the income statement, net income goes to one of two places, as we discussed earlier. It either leaves the company and goes out as dividends or distributions to shareholders, or it stays in the company as retained earnings on the balance sheet. And net income is also used as the starting point for the calculations in the cash flow statement. And ending cash from the cash flow statement is entered on the balance sheet. And the balance sheet ties it all together through retained earnings and cash and shows stakeholders what the overall financial position of the firm is. So the financial statements are a multifaceted view of the company. They're not really separate things. Okay, that's a quick overview of the key financial statements that are used in the insurance industry. We talked about how finance is actually a story being told about the company, and we went through the income statement, the balance sheet, and the cash flow statement. Hope that helped.